Go to Liz Clayman in Omaha with, I believe, Warren Buffett and Company, right?
You bet. From Varney and Company to Warren Buffett and Company, thank you so much. Varney, you got to watch this because we're going to talk about a lot of things that you and your viewers have talked about. But first, we welcome Warren Buffett, the chairman and CEO of Berkshire Hathaway. Thank you for being here.
Thanks for having me.
Hey, the markets are open and trading.
Good.
Let's take a look because you said over the weekend, and you rarely say this, that Berkshire Hathaway stock is undervalued. And as we look at how it's trading, it is up slightly, about 0.5%. What do you think of that trade? Do you think it would have been higher, lower?
Well, it doesn't change my conclusion because it's up 0.5%. And you know, I have no idea whether Berkshire stock will go up or down in the next week or month or year. But in relation to the businesses we own, it's attractive.
One of the #1 questions that came out this weekend was so interesting to me because I've been coming 6 years and I've never heard so many people ask, why isn't Berkshire paying a dividend? This at a time when the largest percentage of S&P 500 companies are now paying dividends, first time in a long time that they are. And then you have the fact that you own dividend-paying stocks like Coca-Cola, American Express, Intel, which just raised its dividend this morning, by the way. Why won't you pay a dividend to your shareholders?
Well, we think our shareholders 5 years from now will be wealthier, counting what they would get from the reinvestment of the dividend. We think they'll be wealthier if we hold on to the money. Now, we may be wrong in that, but historically we've been right. And if we'd paid a dividend over the years, our shareholders would be considerably poorer than they are. As long as we think we will have the opportunity to invest dollars to create more than $1 of present value, we'll retain the money, and when we don't think we can do that, we'll either repurchase stock or pay dividends.
Is there no way you will ever pay a dividend?
Oh, someday Berkshire will pay a dividend because it'll get so large that it can't use the money or all of the money that it earns effectively. But we don't think we're at that point, although we're much closer to that point, obviously, than we were 20 years ago.
I just mentioned that Coke pays a dividend. Speaking of Coke, the board is mulling a stock split. Would you be for a stock split of Coca-Cola?
I'm totally neutral on that. It's fine with me if they do, and it's fine with me if they don't. But it won't make any difference to us in terms of the value of our Coca-Cola stock.
Okay. The succession plan was a very major focus here, and you said you'd be very clear about it. You do finally have one person in mind with two backups. I got you to tell us yesterday that it was a he,
yeah.
But it is a male.
It's a male.
It is a male, okay. I talked to some shareholders who said it is becoming increasingly evident to them that it's Ajit Jain who runs your insurance business. Keep going with the poker face, Warren. Because they say the insurance business is increasingly becoming one of the major important factors, the most important factors for the future of Berkshire and the profits that it brings in.
Well, I would say this about the insurance business. It's been enormously important in getting us to where we are now. It's still enormously important. It's actually not as important relative to the entirety of Berkshire as it was 10 years ago. We've added more businesses away from insurance. But insurance has driven us to where we are presently.
And the culture, you said he understands the culture of Berkshire.
All three of the candidates understand the culture very well.
All right. All three, but Ajit at the top.
No, when we put you on the board, you'll know.
Okay, all right. Only the board knows. You also said about your successor that under your new successor, there will not be much of a derivatives book under Berkshire's umbrella. Is that because you feel you really understand derivatives in a way that nobody else does, or that they've become dangerous for Berkshire?
No, there isn't that much of a derivatives book right now if you look at the total value of Berkshire. We've done very little in derivatives, but we have one particularly good-sized position in terms of our equity put situation. Oh, that's nothing compared to what we have in equities overall. So it's not a big deal now. I would guess it would be a lesser deal, and partly that's because the rule, in fact, in a big way, that's because the rules have been changed on derivatives. We would not have the derivatives position we have now if the rules had been the same 5 or 10 years ago in relation to posting of collateral. We think that derivatives become much more dangerous for the individual enterprise when they're required to post collateral.
Okay. You're 81 years old. That's not any news to anybody. But look, the fact that you were diagnosed with stage 1 prostate cancer gave some people a start. It is obviously non-aggressive, and you say it's a non-issue, and you won't miss a single day of work due to your treatment, which starts in, what, July?
Mid-July.
Mid-July?
Yeah. Mm-hmm.
You won't miss any work at all?
No, no. No. Maybe 15 minutes a day, something like that.
We can lose you for 15 minutes.
Well, I wish you felt we couldn't, but the truth is you can't.
When you look at the person who will eventually take over, have you begun to apprentice your successor?
My successor doesn't need apprenticing. If they needed apprenticing, they wouldn't be the successor
wouldn't
candidate.
be the one.
No, in fact, none of the three candidates would need apprenticing.
In some of what you talked about how great some businesses are, but you talked about a big mistake. Energy Future Holdings bonds from a Texas utility company.
All mine do.
Sorry to bring it up.
Did it by myself.
But these were tied very tightly to the price of natural gas.
Absolutely.
Which plummeted shortly after you bought it.
Right.
How'd you get that so wrong?
It was easy. I'll probably be able to do it again. It was just a case of not cranking that in to my decision, waiting with the appropriate probability.
But 2010, you had to do a $2 billion write-down. 2011, another $398 million write-down.
It's not quite that total, but the total we put in was about $2 billion, and I think it's been written down to maybe $400 million or $500 million.
How much worse is it going to get?
Well, it can go all the way to zero.
Do you think it will?
It easily could.
Who sold you on this idea?
Me.
Really?
No.
Not
I did
Goldman
these by
Sachs?
myself. No, I have a real ability to pick these babies out.
Okay.